Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And also, we're just for fun, the first caller with the correct answer on the first trivia question is also going to win a couple of free tickets to the San Fran Halen concert, which is at the Flamingo Hotel. It's a tribute band to Van Halen, and it's on August 16th. And all you have to do is just answer the first trivia question correctly and leave your phone number and you leave your phone number and your email address, and we'll get you everything. Okay. All right. Now, we do have a special guest today, Mark Hanf, who used to be a co-host on The Best of Investing for many years, but he got so busy, he said, Edward, you're just going to have to take it on your own. President of Pacific Private Money. Mark, welcome back to
Welcome back. Yeah, back again. And we had a little bit of a challenge with the audio and the video, and I have to wear my headphones here, so I really look like I'm in the radio business here. If you're watching me on camera.
Right. Yes, you are. So you always keep up on what's going on in the economy and interest rates. Why don't you give us a little update?
The economy, interest rates, real estate, mortgage, even crypto lately, AI. We can talk about anything today. Yeah, it's it's interesting. I was having a conversation today with a commercial real estate broker. We have a mixed use property in Berkeley that we foreclosed on. We don't foreclose on many properties at Pacific Private Money, but every now and again, borrowers run into trouble, and we try to work with them as long as we can. But when that becomes impossible, we have to foreclose. And so we own a mixed use property right now in like I said, in Berkeley that needs a lot of love. So haven't had a lot of offers on it. I'm talking to the broker that's got the property listed, and I was really actually intrigued by his response, because I said, we probably did more loans in Alameda County than any other county in the Bay Area after the 2008 real estate, the Great Recession, right? So from 2009 to probably 2012, I mean, I think like 75% of the loans we made were in Alameda County, Oakland, Berkeley area, a lot of foreclosures. And there were so many real estate investors that were coming out of the woodwork back then to buy those properties. And so I was asking John, I said, I wonder where a lot of those guys have gone. I'm really surprised that we haven't gotten more offers and property tours from real estate entrepreneurs, guys that were looking for value add opportunities. And he thought the reason was, among others, higher interest rates, of course, higher costs for materials and labor. And labor is a problem now because you've got ICE running around, deporting, a lot of the construction workforce, which is really unfortunate. But that wasn't the big one. He said he thought that a lot of younger who used to be real estate entrepreneurs are now investing in crypto. And that's why I mentioned crypto a little bit earlier. Yeah, I don't think that's true, because I talk to a lot of people, and I find that the vast majority of people I speak with, especially older investors, aren't really interested or don't invest a lot in crypto. Now, I am a crypto investor, so I love it. I've always been a fan of tech, and now a fan of AI, and I listen to a lot of podcasts. So anyway, so we'll talk today a little bit about what I see and what I've been reading about mortgage rates, where real estate is heading. Are we heading for a crash? Another 2008 revisited? So stay tuned for that.
All right, we're going to go to our first trivia question here. And as just a reminder, the first caller with the correct answer is not only going to win that tanning certificate, which, by the way, is worth over $100, but a couple of free tickets to San Fran Halen. And August 16th is a Saturday. I think it starts at like 8 p.m. at the Flamingo Hotel in Santa Rosa. Kind of a tribute band to Van Halen. All right, first trivia question. We're talking TV theme songs here. Those Were the Days. What TV show was that from? Those Were the Days was the song. All right. Call 888-912-1190. The first caller with the correct answer wins the tanning certificate and those 2 free tickets to San Fran Halen. Don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Mark Hanf, president of Pacific Private Money. First trivia question: those were the days. What TV theme song, TV show was that from?
Man, we're old. I should remember that, but I'm going to say Happy Days, but I know that's not the
No,
answer.
All in the Family. Those were the days. Remember that?
That's
Okay. All
that's
right.
right. All in the Family.
Yeah. You want to
Great.
make a mention here also for Action Whitewater Adventures provides the best rafting experience in the North Bay. From beginners to more advanced rafters, check them out. actionwhitewater.com for rafting trips. All right, so Mark, you told us before the break that you have all kinds of good stuff to talk about with regard to the economy, interest rates. Take it away.
Well, Wednesday of this week, the Fed committee met again, and as expected, they did not reduce interest rates. And there is general belief that mortgage rates remain high because the federal funds rate remains high. But there's an interesting article I came across this week. It showed a graph with a correlation between short-term rates based on the federal funds rates, which impacts the prime rate, basically, which not a lot of people talk about the prime rate these days anymore, but the federal funds rate is for short-term rates, and how that compares to the 10-year rate. Now, the 10-year rate is what's generally impacts mortgage rates, and the even last year, fourth quarter, they reduced the federal funds rate twice for all of 50 basis points in the fourth quarter. But since that time, the 10-year and the mortgage rates have increased. So it's really, although mortgage rates did peak at around 7%, maybe a little bit higher, 7.1. Now they're at 6.75. But the 10-year has been stubbornly high so far this year, and a lot of that relates to our current presidency and the tariffs, or the threat of tariffs, and the uncertainty. Markets hate uncertainty, and uncertainty has caused, I believe, a premium on the 10-year bond yield, which is helping to keep.
Though, you're right. They hate uncertainty, but the stock market investors hate uncertainty too, and the market's been hitting either new highs or close to new highs, right?
Absolutely. Well, I wonder if the stock market is impacted more because some of the larger companies that are impacting that have an oversized impact on let's say the Dow or even the S&P. You've got companies like Nvidia and all of the big companies that are chasing AI. Their valuations have been going up. Their stock prices have been going up quite a bit. So again, what's funny is that. Whenever we're in or facing or predicting, like a recession, economic recession, it always the market cycles, the economic cycles, are always impacted by a different collection of variables, right? So now we've got the Trump tariffs. But we've got tax breaks. They just passed a tax bill. We've now got AI that is causing an awful lot of money to be invested in certain segments, certain companies that are headlining AI technology. So, yeah, but you're right. It's like, okay, well, stock market's doing great. Bitcoin is at an all-time high. Inflation really isn't all that terrible right now.
The tariffs, they kept saying, oh, tariffs are going to create this crazy inflation, for these reasons. But then I also heard, obviously it hasn't happened. And I've heard that the main reason is that the overseas companies have basically just lowered their prices.
Mm-hmm.
Is that with the tariffs, it would be way too expensive, that they just lower their prices, which kind of makes sense.
Well, what's noteworthy, I guess, from kind of what's the moral of the story here. The moral of the story is that nobody's crystal ball is very clear right now. Even if the Fed did lower rates by 25 or 50 basis points, in all likelihood, it would have had zero impact on mortgage rates. In fact, it could have caused mortgage rates to even go higher. So there's a lot of naysayers out there that are saying we're looking at the wrong thing. It's not Fed Chairman Powell who's the enemy and the cause of higher mortgage rates, but rather what tariffs and other issues in the economy right now leading to uncertainty and causing those that really impact those factors that impact the 10-year rate are just, it's going to take more than lowering the federal funds rate to impact directly necessarily mortgage rates.
Well, that'd be kind of interesting connection on that.
Mm-hmm. Well, it always has been to some extent, although generally speaking, the 10-year has followed closely with the trend of the short-term rates. But every now and again, we get into a situation where short-term and long-term rates don't correlate, and so it's just it's a little bit more complicated than what meets the eye.
Mm-hmm.
So anyway, mortgage rates, I think, are going to remain for this year at 6 3/4. I don't know if they'll trend downward to 6.5. I think some of the predictions from experts that I'm reading are saying that maybe that we'll have 6.5% interest rates by the end of the year. But I think the magic number that people are looking for is closer to the low sixes or high fives. That would really cause at least the residential real estate market to take off.
I think, Trump wanted like a 4% cut. He wants it down to like 1%. Go, okay, well, we'll see how that pans out. All right, we're going to go to our second trivia question here. This one, I think you'll get this one. We're talking TV theme songs.
Yeah. Where
everybody knows your name. See, if I sing it, you'll know for sure. But this, I'm just going to say it. Where everybody knows your name. What TV show is that associated with? For the audience, call 888-912-1190. First caller with the correct answer wins that tanning certificate, which, by the way, again, is worth over $100. I do want to make a mention here also for the Transcendence Theater. They have some awesome Broadway show type shows at the Sonoma Outdoor Theater. Always love going to them myself. Check them out, transcendencetheater.com, to check out their various show dates. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, along with Mark Hanf, president of Pacific Private Money. Second trivia question. The theme is TV theme songs. Where everybody knows your name. What TV show was that from?
Norm. Cheers.
Yes, cheers.
Norm. George Wendt, who just passed away recently, unfortunately.
Yeah. A lot of people just recently passed. Hulk Hogan, Ozzy, and Chuck Mangione. Well, there's a lot of people. A lot of people don't remember him. He did a lot of music in the 70s mostly.
Right.
All right.
Our generation's getting older. So sorry, step on you. You're going to.
I know. I was all excited to finally get on Medicare. Who looks forward to it?
You're not well.
Pretty good. So give us a little update. What's been going on at Pacific Private Money?
So it's no surprise to listeners that the volume of mortgages have gone way down since mortgage rates went from generally 3-ish% and shot up to 7% in like 6 months. And I think we just passed the 3-year anniversary last quarter of that major increase in interest rates. And so it has slowed down movement. We've been stuck at about 4 million units per year nationwide when the average is 6. So that's a pretty big difference. That's not a record low. I mean, we've had over the last 15 years, we've had periods where transactions have gone below the national average, but we've been stubbornly low now for 3 consecutive years. But that doesn't mean the demand for capital has slowed, because there's still real estate entrepreneurs, there's still homeowners who need to move. And because we don't need to do thousands of loans per month or even thousands of loans per year, we're probably going to do about 250 loans this year at Pacific Private Money, with the average loan rate between $750,000 and $1.2 million. And probably about half of those are going to be consumer bridge loans, which help people move from their current home to their next home without having to sell first. It's a buy before sell strategy. It allows us, assuming they've got sufficient equity in their home, we can do a loan for 100% of the target home they're looking to purchase. and will use their existing home as additional collateral. They call it cross collateralization. So it's one loan secured by two homes. And that's a really popular tool for people who want to buy before sell, because really, with life as complicated as today, do you really want to sell first, move your stuff into storage, move into an apartment, and then look for a place to buy? Or do you want to limit yourself in your buy options by making purchase offers that have a sale contingency for your home, which might require the seller to wait around? Because again, no telling how long it's going to take to sell your home in today's market. Homes don't fly off the shelf like they did 3 years ago.
Yeah, my wife said that she did not want to live in a storage unit while we're looking for property.
That's right. Most of them don't have windows. Pacific Private Money has always served the real estate entrepreneur. So in addition to the home buyer, which I said right now is about half of our business, the other half is still folks that, like, for example, people are selling properties that they've invested in and utilizing the 1031 tax exchange benefit to be able to then sell and then buy their next property and not have to pay taxes on the gain, because they're just they're sharing they're converting their basis into the next property. There's also a reverse 1031 exchange, which, much like our consumer buy before you sell, it's the investor buy before you sell. It allows someone who wants to sell a property to go out and get financing from a company like ours to help them buy the target property first, the one they want to exchange into. And the benefit of that is, in a traditional 1031 exchange, you sell, you close, then you've got 45 days to identify the property you're going to buy. And oftentimes that is a mad scramble. And then, of course, you've got 180 days to close after that. But that can often take longer. And so you get the benefit of continuing to own your income property while you pursue your trade property. So generally speaking, the money you save by being able to buy before sell oftentimes pays for the cost of our financing. So again, these are unique financing opportunities that you're not going to find from a bank. In fact, most banks today aren't making a lot of mortgage loans. Most real estate entrepreneurs and home buyers who really want to compete in the marketplace and get the home they want, they're turning to alternative finance providers like Pacific Private Money. We've gone in the last 20 years from being the lender of last resort for many to be the lender of first resort.
Gotcha. Okay, we're going to cut to our. I was just thinking about the law they were thinking about passing of taxing unrealized gains, which would be an absolute disaster. Because what happens when if things drop? Do you suddenly amend your return or file for a refund? I mean, that's absolutely ridiculous. Okay,
there's never been a tax idea that Democrats didn't love.
That's it, exactly. Okay, here's our third trivia question. Welcome back. That was the that was the TV theme song to which TV show? All right, you ready for a couple of silly jokes of the week? Here we go. What did one depressed accountant say to the other? It's a cruel world out there. A cruel,
yes.
A tax basis, but a cruel. And let's see here.
Joke there.
There it is, exactly. And after hearing a sermon about lies and deceit, a man wrote to the IRS and said, I have been unable to sleep knowing that I've cheated on my income tax. I have reviewed my taxable income and closed a check for $900. If I still can't sleep, I'll send in the rest. All right, audience, stay with us. You're looking to the best of investing. Don't touch that dial. We're going to be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Mark Hanf, president of Pacific Private Money. Third trivia question. The TV show where the theme song was Welcome Back. Go ahead, Mark. What was that?
Welcome back, Mr. Carter. Welcome back, Carter.
Yes, right. Hey, 2 for 3. Not bad. Not bad. All right.
Yeah, I was imitating one of the characters, Mr. Carter. He used to always say.
Ron Palillo played Horshack. Mr. Carter. Okay. Gabe Kaplan played him. Okay. So, Mark, Pacific Private Money, you allow investors to invest in your funds. Tell us a little bit about that.
Yeah, so at Pacific Private Money, we're an alternative real estate finance provider, formerly known as hard money, more currently known as private money. We basically serve two clients. We have our borrower clients that are looking for fast, reliable bridge financing, short-term financing. Most of our loans are less than 2 years. Many of them are less than 12 months, and many of them pay off in 6 months or so. But we use private capital for that. So we've got a couple of different mortgage funds that we use that are appropriate for investors who are looking for a passive way to earn as high as 10% annual. We have both of the funds that we're raising capital for right now are currently paying an introductory rate of 10%. Which will be good for 12 months. So again, 12% interest rate secured by real estate.
And 10% for 12
I'm sorry,
months.
yeah, 10% annual rate. And we're promising to keep that rate for at least 12 months for all new investors. And again, that's for our mortgage fund. The other way we work with investors is that we work with a more seasoned note investors. In California, it's called trust deed investing because mortgages are actually deeds of trust in California. So trust deed investors, we work with them. And so I would say maybe a third of the loans that we fund are funded through trust deed investors, where one or more individuals are the actual lender on that specific note, and that is their collateral, that one note secured by that one property. And when you invest in a mortgage fund, it's like a mutual fund of loans. So your money is in a pool with other investors, and that money we pull together and we use that to close the loans. Many of the loans we keep in the portfolio in the fund until maturity, and others we will sell and sell to a number of different New York firms. And the reason we would use our mortgage fund to close a loan and then sell it is that oftentimes the fund is full of loans, and the actual liquidity in the fund is not enough for us to be able to continually fund week after week after week our loan volume. So we have a capital stack of cash that in our funds that we keep liquid that allows us to fund loans on a weekly basis. Right now is the busier season. So the second quarter and the third quarter are our busiest note seasons of the year. And so we are always bringing in new capital, and we have people leaving at the same time. So we need to keep replenishing capital when investors leave. So we have generally the same amount of money that we need to keep the business afloat, to keep the business profitable, and to serve the needs of our real estate investor clients.
Good. How do people get a hold of you?
So go to pacificprivatemoney.com. That's pacificprivatemoney.com. What's nice about our website is not only are we very transparent about who we are and what we do, it's got all our photos on there, our bios, contact information, email addresses. Anybody could find me on LinkedIn. I'm pretty ubiquitous on the web. If you type my name, Mark Hanf, there's not too many Hanfs out there, so I pop right up. But the other nice thing about the website is we do webinars periodically. We just recorded a webinar this week on the Pacific Freedom Fund, which is one of two funds that we're promoting right now. And I think we went about 40 minutes on that, going through the nuts and bolts of the Pacific Freedom Fund. And again, those webinars are posted on our website, so you can go back and watch them at your convenience. And it's just a great way to invest in real estate without owning real estate. And what I mean by that is when you invest in mortgages, it's almost the best of both worlds. You've got the stability and the equity protection that a real estate loan provides, especially when we only loan generally up to 70% of the property's value or the purchase price. Right. So you've got protective equity, you've got a lien, first position lien on that property, and you're getting a 10% rate. So it's when compared to what I think the best CDs you can get right now are 4%.
4%,
So, yeah. And one of the neat things about also investing in one of our funds, and you don't necessarily get this when you invest directly in notes, but if you invest in our fund, they just passed a law extending the qualified business income deduction, which essentially means that you only pay taxes on 80% of your fund interest income rather than 100%. And so that 20% interest savings there, that just boosts your effective yield. So it's a great way to get even better than a 10% rate effectively based on your taxes.
And of course, you always want to talk to your CPA to make sure you qualify, because there are limitations.
Absolutely.
Check them out. And again, give out your information one more time so the audience can get a hold of you if they want to see how they can earn 10%. 10%.
Yeah, it's pacificprivatemoney.com. Again, all one word, pacificprivatemoney.com. Check us out if you're looking to rent money, or if you would like to participate in allowing us to rent your money out and pay you a 10% annualized return secured by real estate.
All right, audience, stay with us. You're listening to The Best of Investing. Don't touch that dial. We'll be back with some closing comments. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf, president of Pacific Private Money. Mark, you guys just had a webinar and you want to share some nuggets with us.
Yeah, absolutely. So a lot of people are of the belief that home prices are dropping, and if they're not dropping now, they're definitely going to be dropping in the near future. In fact, there's always those crash bros out there that believe that another 2008 is right around the corner. I don't happen to believe that, and I don't think any of the economics or the underpinnings of the real estate market today and the mortgage market would support that belief. But here's some interesting statistics just in the San Francisco Bay Area, the Bay Area counties. So through June 30th, the first half of 2025, let's look at year over year home prices. Alameda County down 4% year over year, but Contra Costa County was up 4% year over year. Marin County, those expensive houses, down 8% year over year. Well, probably a good idea. San Francisco, though, is up 3% year over year. Then Solano County, where you have Vallejo and a lot of other, less expensive houses, home prices are down 5%. But then let's head over to Silicon Valley, Santa Clara, up 8% year over year. Napa County, which is right next to Solano County, is up 15%, the highest increase of any of the Bay Area counties. So, we always say that real estate is local, and real estate is local, county by county. And like even in Marin County, I know that if you look at home prices in southern Marin, which include Tiburon, Mill Valley, and Sausalito, those prices will behave differently than, say, San Rafael or Novato. So, I mean, real estate is state by state, it's county by county, it's city by city, and then neighborhood by neighborhood. So when you see national averages, which for some reason the media is always loves to play national averages, there is no national market, and national averages, give you a hint possibly of what's happening in general, but really aren't going to give you the full story, especially if you're a home buyer looking to, find markets where maybe there's opportunities for there to be a buyer's market rather than a seller's market. The thing with sellers, though, is it's been a seller's market for so long, over 10 years now, it feels like, that a lot of sellers, they're holding their price because they're sitting on a 3% mortgage. Maybe they don't have to move. And so therefore, it's like, well, if I get my price, I'll sell, but otherwise I'll just continue to live here. So one good nugget is that the housing supply is increasing. So it's not clear cut yet, though, if it's a buyer or seller's market, but housing inventory is increasing. So again, that's good news for real estate agents and mortgage agents, those people who want to see a healthier transactional market. But in addition to rising inventory, we've got prices clearly are stabilizing. Homes are on the market for a longer period of time. They're not flying off the shelves, and there are sellers are more willing to negotiate on price. Not as many multiple offers. So really, we're in a a correction of sorts right now in real estate, kind of a pause in what we've grown accustomed to of year after year of significant real estate inflation. But I don't think it's a crash or a collapse. Prices are expected to fall moderately, but they're not expected to reach pre-pandemic levels at this point.
Very good. All right.
Yeah.
Mark on Pacific Private Money. Check them out,
Mm.
pacificprivatemoney.com. Here's our thoughts of the day. So it's
Yeah.
been 6 months since I joined the gym and still no progress. So I'm going to go down there in person and see what the problem is. and,
That's right.
and this little old lady in front of me had $249.76 worth of groceries, but her credit card was declined. And I know will bless me for this. It was a lot of groceries, but I helped her put them all back on the shelf. All right, tune in next week. Just kidding, audience. Just tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
So long.